People are writing the plus 2 CBSE examination in 2025. So let me solve this example in partnership accounts. It is on a sum on retirement. This sum is important from examination standpoint. Now let's go ahead and go through the question. Just follow the question carefully. And then I'll give out the solution in steps. Now these are the steps you can follow for any example on partnership retirement. In case you get a full-fledged example, now where you have been asked to prepare the partner's capital revaluation account and balance sheet, you can go ahead and follow these steps in the examination as well. Now let's go ahead and go through the question properly. Yes.
So Robson, Sampson and Thompson carried on a business in partnership, sharing profits in the proportion of 4:3:2.
Now let us call them partners R,
S and T.
S and T. The partners are R, S and T. And the profit sharing ratio, the PSR, is 4:3:2.
Their balance sheet as on 30th June 1992 stood as follows.
Now people might wonder why not 31st March. Now being a very old examination question, the year ends on 30th June. By any examination, the question will be altered to 31st March, say 2024. Is that fine?
Yes, sir.
So don't bother too much about the June 30th and also the year 1992. Yes.
So liabilities, we have sundry creditors 41,400, capital accounts of R 87,800, S 66,000 and T 43,800, in all 197,600.
Okay.
So on the asset side, we have cash in hand, cash at bank, sundry debtors 25,000, PBD 500, stock, plant and machinery, land and building.
Okay.
So then Sampson, yes, retires from the business on the same date, and the following adjustments of assets and liabilities have been agreed upon before ascertaining the amount payable by the firm to Sampson.
Okay, so on the date S retires, okay, and then now is given the additional info. Yes.
So number one, the provision for doubtful debts to be raised to 5% of sundry debtors.
So a point to note, it's given that you have been asked to increase a provision for bad and doubtful debts to 5% of debtors. Now what is the amount of debtors on the balance sheet, guys? 25,000 rupees. If we apply 5% on 25,000, you will get rupees 1,250.
Yeah.
But provision already in the books is 500. That means you are supposed to increase a provision by rupees 750. And that increase will be accounted in your revaluation account, right?
Yes.
Next.
Land and building to be appreciated by 15%.
Now, what is the land and building given on the balance sheet? Rupees 1,20,000 given. And this has to be increased by 15%. So 1,20,000 into 15 by 100 look at to rupees 18,000 increase. Again, this increase will go through the revaluation account. Next.
The next is a provision of rupees 650 to be made for outstanding legal charges.
So basically make a provision for outstanding legal cost. Not there in the books, but you are supposed to make a provision for outstanding legal cost. Next.
It's an unrecorded liability.
Unrecorded liability, you are supposed to pay the lawyers, right?
Yeah.
The legal cost to be provided for. Next.
The next stock to be reduced to 32,000.
It is given that reduce stock in trade by 32,000, rather to 32,000. And what is the amount on the balance sheet?
36,000.
So that means suppose they reduce it by rupees 4,000. Next.
Goodwill of the firm to be valued at 45,000 rupees and S's share of this same to be adjusted into the accounts of R and T, who decided to continue the business, sharing profits and losses in the proportion of 5:3.
Okay, so guys, whenever there is a goodwill valuation done by the firm on partner's retirement, of this 45,000, you are supposed to consider the retiring partner's share of goodwill and that will be compensated by the gaining partners. Here the gaining partners will be partner R and partner T. And who's going to sacrifice? Is partner S. Yes for Samson and S for sacrifice. Okay. This person is going to sacrifice his goodwill. Okay.
Yes, sir.
And who's going to enjoy this goodwill going forward? It is R and T. Next.
The capital of the new firm to be adjusted in proportion to their new profit sharing ratio and actual cash to be brought in or paid off by or to the continuing partners as the case may be.
You know, this last part, nothing but a capital adjustment. It is adjustment of capital. Okay.
Yes, sir.
And that is where they say the new partner is continuing partners capital, that is R and T, should be in the profit sharing ratio.
Then S agreed to leave the amount due to him by the firm as loan to the new firm, carrying interest at the rate of 6% per annum.
So when you close a retiring partner's capital account, you are supposed to transfer the amount due to that person to his loan account. And that loan carries how much rate of interest? 6%. Next.
Prepare the revaluation account, partner's capital account and balance sheet of the new firm following retirement of sums.
Okay, guys. So now we shall go. These are the steps you follow. Now, whenever there is a full-fledged example on partnership retirement, you can follow these steps, right? It is foolproof. Just follow these steps. You can never go wrong in the examination. Now, step number 1, please refer. That is, you are supposed to state the new profit sharing ratio and also mention what is a sacrifice made by the retiring partner and also calculate the gaining ratio for the continuing partners, right?
Yes, sir.
We know that the new profit sharing ratio, you don't have to really rack your brain. It is given in the question as 5:3. So 5 by 8 and 3 by 8 is a new profit sharing ratio between partner R and partner T. That is Robson and Thompson, right?
Yes, sir.
And then the next point is the sacrifice made by Samson. It is 3 by 9. Remember the old ratio of 4:3:2. So 3 by 9.
Yes, sir.
And then how to find the gaining ratio? Very simple. It is a new profit sharing ratio minus the old profit sharing ratio, right? So what are you going to do? It is going to be 5 by 8 minus 4 by 9 for partner R, Robson. And that will work out to 13 by 72. And then for partner T, it is going to be 2 by 9, that is 3 by 8 minus
2 by 9.
2 by 9, and that will work out to 11 by 72. So therefore, just ignore the denominator. The ratio between them is 13 is to 11 is a gaining ratio. Okay, that is the first step. Okay.
Yes, sir.
Now I'll go to the second step. Step number 2, that is you want to deal with the goodwill. Accounting, the treatment of goodwill. Very simple. You take the retiring partner's share of goodwill, which is 45,000 rupees. That into 3 by 9. That will work out to 15,000 rupees. And this is sacrificed or the lost by this partner, and this will be compensated by partners R and T in the gaining ratio 13 is to 11. Now what is 15,000 into 13 by 24? 8,125. And then the other partner, that is a partner T, it is 15,000 rupees into 11 by 24, which is how much?
6,875.
That's it. Now we're going to record the journal. Just see the journal. It will be debit the gaining partners and credit the sacrificing partner, right?
Yes.
It is going to be R, that is R's capital account debit. Okay. Also T's capital account debit. Now how much R's capital?
8,000.
It is 8,125. And how much T's capital?
6,875.
6,875. And to the retiring partner's capital, that is Samson's capital, the amount is 15,000. Is that clear?
Yes, sir.
Now that is a treatment of goodwill, right? In any sum on retirement, whenever there is goodwill valued on a partner's retirement, this is the entry. Debit the gaining partners and credit the sacrificing partner, right?
Yes, sir.
And step 3, how do any transfer of any existing reserves, profit and loss and goodwill on the balance sheet of the firm, right?
Yes, sir.
But here no reserves, no P&L balance, no goodwill on the balance sheet. Okay? So you can step number 3. What is the next step?
4. Revaluation.
It is a revaluation account we are going to construct. And you all know this, right? In your revaluation account, we are supposed to credit all the gains and then debit all the losses, right?
Yes, sir.
Now there is an increase in the value of land and building, which is a gain, right? Increase in asset. So I give a credit. That is a buy land and building account. It is 18,000. And then now there is an increase in provision for bad debts. An increase in provision is actually a loss. It is like decrease in asset, right?
Yeah.
It's going to reduce the debtor's amount. You shouldn't say increase in.
Liability.
It is increase in. It is a decrease in an asset. So the minute you increase your provision, what happens? Your debtors less provision, that amount will reduce, right? So to provision for doubtful debts, the amount is rupees 1,250 minus 500, 750 is increase, which we discussed earlier. And also to stock in trade, to stock account, the amount is 4,000, reduced by rupees 4,000, right?
Yes, sir.
And then it is a provision for outstanding legal charges. What is the amount?
650.
650. Now what I do, I balance this account. I am supposed to calculate the gain or loss, whether it's a profit or loss on revaluation. And here, since the credit side is more than the debit side, it's a gain, or you can say a profit on revaluation. And what is the profit in all? 12,600. And that is transferred to all the 3 partners, including the retiring partner, in the ratio 4:3:2, the old PSR, right?
Yes, sir.
So how much you get for R?
5,600.
And how much you get for S?
4,200.
And then for T?
2,800.
That's it. In all 12,600, and the account total is rupees 18,000. And with that you complete step number 4. Next, preparing partners capital account. In the capital account, first entry, buy balance brought down the opening balance in the 3 partners capital, right?
Yes, sir.
Whatever is there in the balance sheet. What are the numbers?
87,800, 66,000 and 43,800.
Very good. Then any reserves? No. But please record the entry for goodwill what we passed. Remember, it is R account debit, T account debit to S.
Yeah.
So in the partners capital, just see on the debit side, to Samson's capital under Robson, it is 8,125, and under Thompson, it is 6,875. Then under, that is on the credit side, it is by Robson and then by Thompson under Samson, right?
Yeah.
8,125 and 6,875 posted.
Yes, sir.
And then next, any other entry? No.
Revaluation gain.
That will be posted now. By revaluation account, gain how much? 5,600, 4,900 and 2,000.
4,200 and 2,800.
And 2,800 posted.
Yeah.
Now what you should do, you have to balance Samson's capital account and that will be transferred to loan account. Now this is Samson's capital account. On the credit side you have buy balance brought down. Also by Robson and Samson. Also
Robson
by
and Thompson.
Robson and
Thompson.
I'm really sorry guys. Okay, Robson and Thompson under Samson, right?
Yeah.
Also by revaluation account. What is the total?
85,200.
That is the amount due to the retiring partner. That will be transferred to loan account. It will be to Samson's loan account. You can also mention the rate of interest. It is 6% or whatever rate of interest given. Loan account. Amount is 85,200. Now, just be careful. Do not simply balance the other two partners. Come write two balance carried down. Don't write that way because it's given that the two partners R and T, they want to have their capital account in the new firm in their profit sharing ratio 5:3. That's the catch. So that is your adjustment of capital, AOC. What is that? Adjustment of capital. Now, so that please do not balance a partner's capital account straight away and write the amount by two balance carried down. Guys, go to your, just go to a working now. Just see the working. For that you have to find what is a balance in R's capital. What is the opening balance?
87,800.
To that add
5,600
minus that is 8,125 debit. What is the balance?
85,275.
Very good. And then for Thompson, what is the capital opening balance?
43,800.
And then add 2,800 minus
6,870.
What is the net amount?
39,725.
Well, these are the capital account balance in their accounts. Then add both. Adding both, you'll get 1,25,000. And this 1,25,000 is supposed to be the capital balance of the new firm. And this has to be in the ratio 5:3. Now what are you going to do? 1,25,000 into 5/8. How much you get?
78,125.
And then how much you get for Thompson?
46,875.
Now these are the numbers you have to write as two balance carried down in the partner's capital account. Now just go back and revisit the partner's capital account, guys. In the partner's capital account on the debit side, two balance carried down, the closing capital should be not the actual amount. These amounts what you got in the ratio of 5:3. How much you get?
78,125 and 46,870.
Now when you place these numbers, the capital account does not tally. Why? Because if you notice, the balance in R's capital is around 85,000. How much?
85,275.
275. But what is required? Only 76?
78,120.
Therefore excess. So therefore, now what you can do? Partner R has got extra capital in the business. The actual capital account balance 85,275. But required is only 78,125. Therefore, very clearly given, they didn't say current account. They said any excess will be taken away, cash. Right?
Yes.
Therefore, to
bank
account or cash account, okay, 7,150 he'll be paid off. Whereas a T has to bring in money because he has only 39,000.
39,725.
That is actual capital account balance. But how much it needs?
46,870.
That means it has to bring in money. So therefore, by bank account. Or simply what you can do is you can have it this way. You balance a partner's capital. It is either to bank
Or by.
or by bank. To bank means the partner is going to withdraw money from the firm. What is by bank? The partner has to bring in money into the firm. So by bank account under Thompson 7,150 rupees. Is that clear?
Yes.
Then you total the partner's capital account. It's all tallied now. How much?
93,400 for R, 85,200 for S, and 53,750 for T.
That is all. Now we started the last step. What is that?
Balance sheet.
Preparing the balance sheet of the reconstituted firm, right?
Yeah.
That is R and
T.
T. Now just see the balance sheet liability. What is the first item?
Capital.
Partner's capital. Under that for Robson, 76,000.
78,120.
I'm terribly sorry, guys. 78,000.
125.
And then for Thompson, how much?
46,870.
Oh, very good. Adding both 1,25,000 capital. If you want, you can add both. You can show 1,25,000 capital. And then comes
Samsung's loan.
loan account amount due to
85,200.
Samsung, right? Which is rupees 85,200 liability. Next.
Oh, it's sundry creditors 41,000.
No change at all. And also outstanding legal cost. How much?
650.
That's it. Then on the asset side, land and building will be 1,20,000 plus 18,000, 1,38,000. And then next,
Plant and machinery 37,000.
no change at all. Next
Stock 32,000.
will be nothing but 36,000 minus 4,000 down, 32,000.
Sundry
Debtors will be 25,000 minus 1,250,
23,750.
23,750. And
Cash in
then
hand 500.
500 cash in and no change. And cash at
Bank.
bank, what is the amount given?
Opening balance 21,000.
To that, add a 7,150 brought in by Thompson and minus 7,150 that was paid to Robson. He robbed. Okay.
Yeah.
So we paid a 7,150 to Robson. And what is the net amount? Same 20.
1,000.
That's it. And what is the balance sheet total?
2,39,000.
And the balance sheet tallies because it is called the balance sheet, right? So with that, we complete this example. Now guys, in case you want more conceptual clarity and you want to score very good marks in examination, you can definitely attend a crash course. Now we're going to start a crash course on 24th December and goes on till 2nd January. It's going to be a 9-day crash course where all the 3 books will be covered. And if you attend this crash course, I guarantee that you're going to have real conceptual clarity and you're going to score very good marks in your board examination. Okay guys, so see you in the crash course.